Hi guys, it's the latest news to oil revenue shortfalls and foreign exchange reserves consign dominate economic discussion in Nigeria. Nigeria's economic outlook has come under renewed scrutiny as analysts, investors, and policymakers express concern over persistent oil revenue shortfalls and their potential impact on the country's foreign exchange reserves. Despite ongoing reforms aimed at stabilizing Africa's largest economy, experts warn that underperforming crude oil production remains a major threat to government finances, exchange rate stability, and investor confidence. Recent industry data indicates that Nigeria crude oil production has shown some recovery, rising to approximately 1.49 million barrels per day in April 2026. However, production still remains below both government budget absorption and long-term targets. Analysts note that this gap between expected and actual output could significantly reduce oil earnings, which continue to represent one of Nigeria's most important sources of revenue and foreign exchange inflows. According to economic experts, lower than expected oil production means the government may struggle to generate sufficient revenue to fund key budget priorities. The situation becomes more concerning because Nigeria 2026 fiscal projection rely heavily on robust oil receipts to support spending plans, infrastructure projects, and debt obligations. Industry observers attribute the production shortfalls to several long-standing challenges, including crude oil theft, pipeline vandalism, aging infrastructure, operational disruption, and insufficient investment in upstream activities. While some export terminals have recorded improved output following repairs and maintenance, experts argue that the sector remains vulnerable to recurring disruption. The implication extended beyond government revenue. Oil exports remain Nigeria's largest source of foreign currency earning, making production level critical to the country's external reserves. Analysts warn that when oil output falls below expectation, the national earns fewer dollars from export, limiting the ability of the monetary authorities to maintain strong reserve buffer and support the naira in the foreign exchange market. Concern about reserves adequacy intensified earlier this year after official data showed a decline in Nigeria's external reserves. Economists noted that foreign reserves serve as a vital safeguard for exchange rate stability, external debt servicing, and investor confidence. A sustained reduction in reserves could increase pressure on the naira and complicate efforts to maintain liquidity in the foreign exchange market. Some analysts estimate that Nigeria has already lost billions of dollars in potential oil earnings this year due to production shortfalls, reducing the country's ability to fully benefit from global crude oil prices. They argue that every barrel lost to theft, vandalism, or operational inefficiencies represents revenue that could have strengthened public finances and boosted reserves level. Despite this concern, there are also signs of optimism. The administration of Bola Ahmed Tinubu maintains that ongoing economic reforms are beginning to yield results. Government officials point to improved investor sentiment, stronger capital market performance, increased domestic refining capacity, and reforms designed to enhance foreign exchange market efficiency. The government argues that these measures will gradually reduce pressure on external reserves and support long-term economic stability. International observers have acknowledged some progress. Recent assessments suggest that Nigeria's foreign exchange reforms have improved market liquidity and encourage capital inflows. Some analysts even project that reserves could remain relatively strong if reforms continue and oil production improves in the coming months. However, many investors remain cautious. They note that Nigeria's fiscal position still depends heavily on oil revenues, while rising debt-serving obligations continue to place pressure on public finances. President Tinubu recently highlighted concerns about debt cost consuming a substantial portion of government revenue, underscoring the importance of maximizing oil earnings. Any strengthening non-oil revenue sources. Key indicators being closely monitored include crude oil production level and export volumes, the performance of Nigeria's external reserves, foreign exchange market stability and naira movement, progress in combating oil theft and pipeline vandalism, new investment in the oil and gas sector, government revenue performance relative to budget projects, debt savings cost and fiscal sustainability. Economic analysts generally agree that Nigeria's ability to meet its oil production targets will be one of the most important factors shaping the country's economic performance in 2026. A sustained increase in production could boost government revenues, strengthen foreign reserves, improve exchange rate stability, and reinforce investor confidence. Conversely, continued production shortfalls could deepen fiscal pressure and create new challenges for policymakers seeking to sustain economic reforms. Thanks for listening. Don't forget to always stay updated by subscribing, liking, and sharing.